All right. Hey guys, Brad here at Elliott Wave Made Simple. Today we are looking at the silver chart. And the $1,000,000 question regarding silver is whether it has bottomed or not. Has silver bottomed or does it need one more low? Let's go ahead and dive into the chart and look for parameters. As you guys know, Elliott Wave theory is a fantastic method for discovering parameters. So you know where you're wrong, you know where your risk levels are. It's really about the parameters rather than predictions. Although to be clear, Elliott Wave does have absolutely a predictive element to it. But what we are focused on as traders are the parameters. So let's dive into the chart and check out the latest parameters on silver. All right, so originally the way we are looking at this, going all the way back over to the late June low, is that this was an A wave of a larger correction. So we expect the A wave to terminate up here without making a new high as a B wave. And as you can see, a remnant of the past, had price ever gotten above here, I was going to scalp to the long side. And as you can see, price never made it above that level. And that just happened to be exactly the level where the B wave topped out without getting a candle close above this level. One of the things I have learned from the professor, and who is the professor? The website, the app, the man, the myth, the legend, Armando. His group is called The Professor Trades. And in that group, he's in there putting out amazing signals every day and also teaching folks about psychology of trading, which is huge. So I want to give a shout out to Armando for reminding me, when you have a key level, if you can see a 1 hour candle close above a key level, and then maybe see a back test, let it run a bit, and you should see a back test. Price loves to come and back test a key level after it is broken out above it. So rather than buying the breakout, if you see a 1 hour candle close and then any retrace, buy it and put your stop below that key level. So just clarifying that for the value that Armando has provided with that simple, elegant, and amazingly effective technique for trading a breakout. So we didn't get the breakout. And not only that, this is what I was looking for and hoping for, was rejection. And that's what we got. So I started looking for shorts more once this came up into this resistance between the 618 and the 764. And I'm calling this a wave 2 in white. So the down decline for a C wave, which is what we were looking for. We were looking for the C wave in yellow to go with this yellow B wave right here. And a C wave, as you know, if you're experienced with Elliott wave, is more often than not, a great majority of the time, composed of 5 waves. So I was regarding this as the first wave of the C wave in yellow. And once this came up in 3 waves, in other words, not impulsive, very overlapping and corrective looking, and it came up and got rejected right in between the 618 and the 764, and then began another impulse lower. Now, we did catch these shorts. If you've been following my videos, by the way, if you didn't catch that short and you haven't been following the videos and this is your first time, I recommend you hit the subscribe if you're into silver, Bitcoin, a few indices, gold, silver, NASDAQ, oil, crude oil, my favorite. I suggest you subscribe so you can get better parameters to add to your trading arsenal by watching the videos. And I'm going to be educating as well, so you can learn how to make these charts for yourself. All right, back to the chart. So once we started seeing an impulse down here, I was cautiously long here. And then if you were following the videos, you know I was looking for a 1 hour candle close and an impulse to take us above this pivot. And I would have added to the longs above this level, $39.35, $30.93. We did not get a candle close, didn't even come close to that level. So I traded in my long for a short over here and got the most out of it and wrote it down here. And then this, I'm not going to talk again about the analysis right here because that was in my previous 2 videos on silver. But price got contained very nicely in this blue box, which is what we look for for a wave 4 to be contained, and that is exactly what happened. And then we were lucky enough to catch this short, and I posted in the room that I was taking off covering all my shorts at 27.99, which I did. And so now the $1,000,000 question is, where is the low? Has silver already bottomed? I'm going to brighten up these yellow fibs. The ideal target region for a C wave, based on what has already happened in the past over to the left, which is where we take our measurements from, a perfect C wave would terminate somewhere between the 100 fib, the 1236, and the 13382. So I know that seems like a large area, and I agree that it is. It is taken from the overall large corrective structure. So the idea is this is a region that we would expect to see a meaningful low. And if that is the case, I'm not going to guess at that. What I'm then going to do is take measurements of the smaller degree structures, which is what I've been tracking for the last 2 weeks in earnest, because knowing the measurements of these internal structures will give an Elliott wave practitioner a better idea of where might the low actually strike. And guess what? If you've been following my work, you know I put this ratio box. You see this on almost all my charts. If I'm dealing with a standard impulse, that is, I use this ratio box. This is following very standard measurements for a C wave. What I did was I measure the structure of this final 5-wave move, which is in this aqua color. Call this a 5-wave move, which completes the 5th wave in white of C in yellow. This ratio box is what I was looking for this 5-wave move in aqua to terminate. And guess what? It hit the box. Look, it is crazy. The more you learn about Elliott wave, the more you will understand its real value is it gives you a context through which to view the structure of price. Let me say that again. Elliott wave provides you a context through which to view the structure of price. So we're not getting into predictions, right? We're getting into a general context of price, and then we dial in through Fibonacci measurements to try to come up with something a little more exacting. And so that's what we have here. Price exactly hit in this ratio box. So now, does that mean that the bottom is in and we're going higher? No, it's a clue. So there's a couple of clues going on. One is we just dipped below the 100 fib in yellow. This is the target region for a wave 5. This is the ratio box of this smaller degree wave 5 in aqua. And I won't get into the minutia of how this thing measured, but I will just say that this bounce does not look terribly impulsive. But here's the thing. This is a sideways consolidation. This could be a wave 2, meaning we already got a wave 1, and now we are getting support for a wave 2, and that we will project much higher from here. You have to forgive my children. They've opened the door, and now they're making noise. So sorry about that. But what I want to see is if this is a 1, and if this is going to hold this area as a wave 2, let's call it 27,755. 27,755. So that is the last low. I'm going to adjust that because I want it to be exactly on the penny, because sometimes price of any instrument will hit these Fibonacci levels to the penny. I like to just keep that in mind. So I like to put the fib tool exactly where it should go. So what I'm doing here is I'm just adding a projection. Now this is speculative, okay? I'm making a speculative projection of what might happen if the low is in. Okay, so if the low is in, and I find it remarkable that the 1618 happens to be on this red line, which is a known area that we have dealt with in the past. So I really like this level. Oops, I got to turn off my magnet. I really like this level as a potential target. Now, you have to keep in mind, I am speculating here, okay? And this is predicated upon this most recent low here holding. And in fact, that is now such an important parameter. Let's go ahead and put a kind of a thicker red line on that, which I like to do to remind myself that 27,555 is a meaningful level. For bulls, you do not want to see price come down below 27.55. I mean, is it the end of the world if it does? No, it just means it's likely targeting. If it can't hold that level, then it is very likely going to target the next fib level down for a wave, for a C wave. But the argument that I'm making, like if I were in a court right now and arguing in front of a jury, I would say the structure of this entire move down has been behaving very well, as if it is a 5-wave move of C. So this is really the perfect region. It hit a ratio box. Now, the only thing I don't like is the structure here of this bounce, but I could view it as a sideways correction. So if this is going to give you a 1, 2, I'm just going to label these. Now, look, it is very important to realize this is a mistake I made early in my Elliott wave journey. I thought if I saw numbers on a chart like this, that it was a prediction, and I would just automatically trade for that without any concern for my risk level, okay, which is obviously incredibly important to define your risk and not just blindly take trades. So just a word of the wise. So I'm going to leave this on here. If this low holds and price can make it up to 28.83, then that's going to go a long way towards proving the low is in. Does that mean the low is in just because it comes up here? Well, no, because that would be a 3-wave move, which still could be considered a correction. I won't get too much involved in the alternative counts. There are always alternative counts. This is an important place to make this point. Why are there always alternative counts in Elliott wave? This is something people criticize Elliott wave for that don't fully understand the method. They think, well, this method is not valid. It doesn't have, it's not effective because I see these guys changing their counts all the time and moving the labels around. Well, and the reason for that is because we deal with the price action as it's unfolding. So as the price action unfolds, if something changes, if a level breaks, we can remeasure again and come up with the next most likely outcome based on a field of probabilities. Let me say that again. Elliott wave is showing you a potential projection of what is most likely to happen out of a field of probabilities. Again, it comes back to parameters, not predictions. You have to understand markets are nonlinear, complex environment. That means there are all kinds of outcomes that are just not knowable. Okay, keep that in mind. So back to the parameter. That's the low, 27.55. I want to see it get to 28.83 at a minimum, and then hold a pullback that we will measure for. So be sure to subscribe. If you're trading silver and you're liking this and you're getting value, be sure to subscribe. So as I update silver charts, you'll be sure to get the alert. If this is going to hold as an impulse for wave 1 of the next massive move up, at least $10, the way I'm seeing it, then price, if price gets above and comes up to this level, bulls do not want to see price come back down below that level right there, 28.22. So this is the ceiling at the moment, very small scale. This is the ceiling. This is the floor. We want to see price break out of the ceiling, make a new high, and then on the pullback, which there are always pullbacks, we will measure for wave 4, and we do not want to see price get below 28.22. Now, the Holy Grail of Elliott wave trading, this is the last point I'm going to make. The Holy Grail of Elliott wave trading is if you get a full, nice 5-wave move up. Actually, I'm going to trip out if the 2618 is right there at that resistance level. Okay, a little bit higher. So if you get a legit 5-wave move higher with no overlap, okay, then you will look for a 3-wave corrective retrace that we will measure for. Don't worry, I'm going to constantly measure this stuff and present my work. The Holy Grail is if you get 5 up and then you get a 3-wave retrace, that is where you want to go swing long and even add more if we are lucky enough to see this play out as a 5-wave move and a 3-wave retrace, which could get deep, and you don't get freaked out and you add back your longs that you sold up here. You add your longs as it's coming back up. And again, follow the channel to get the parameters. Once it breaks out, you add, because this is a kind of breakout that's going to have a lot more, a higher probability of success after you've had a legit 5 waves up that followed Elliott wave standards, had a 3-wave correction that didn't break anything. Then the next time it gets above the top of this wave, it is very likely you are not going to see that level for 18 months. I know that's crazy talk, right? I just said I don't make predictions, and then here I am making a prediction, but it's based on the parameters. So really all I'm discussing is not predictions. I'm discussing parameters. All right. So you've got the parameters. You know what you're doing. Good luck. I'll see you in the room. Armando Trades. theprofessortrades.com. If you're watching this from YouTube and you don't know what I'm talking about, click the link in the description. It's also in the banner rolling across. If you're getting value, like, subscribe, and I hope to see you in the room with the Professor Trades and our 300 members who are all killing it under the leadership of Armando. Okay, that's it, guys. Have a great rest of your Sunday, and I'll see you next time. Bye-bye.